Hi, I'm Robin with Kell Processing and welcome to my channel. Here is where I like to teach loan officers, real estate agents, and buyers how to have smoother transactions. Today's topic video is going to be work history, so let's get into it. So whenever you work on your resume and you tweak the numbers just a little bit, people stretch out the time that they were with different places to kind of fill in some gaps, make it look like they weren't between jobs quite so long. Well, you can't do that in a mortgage application. You can't stretch the dates and you can't drop off ones you didn't like. In a mortgage application, we need accurate dates, we need a minimum 2-year history, and we need to know if there was any job gaps. Now, job gaps of a short period of time, less than 30 days, are not a problem and generally don't even get questioned by the lender. So those you can just put on there, not a big deal. If it's 30 days or more, however, it's best to go ahead and write a letter up front explaining why the job gap happened. You need to make sure that you do this because the lender needs to know accurate dates so that they can calculate your income correctly. And they also need to see the 2-year job history as required by the guidelines. So you don't want to leave anything out. You don't want to pretend like it didn't exist. Just go ahead and address it up front so your loan officer is aware. And then the lender will have less questions and less conditions for you to deal with in regards to this. Now, most people only have one job, maybe two, in a 2-year history. 2-year history is not very long. However, some industries do have a standard of having multiple assignments or a lot of moving around just because that's what the industry does. So to give you an example, lately we've been doing a lot of traveling nurses. It's just kind of what's going on. And those traveling nurses generally have multiple assignments in a 2-year period. However, it's important to have all of those dates so that the lender sees that regardless of it being an industry standard to move around a lot, the borrower is stable and is in a position that they are ready to have a mortgage. If during a 30-day gap in employment, you were collecting unemployment, it is important to tell your loan officer that as well. That's part of documenting your income history for the last 2 years. Now, getting back over to job gaps, we have to remember that whenever we say 2-year work history, we don't mean 2-year calendar history. Yes, calendar if you haven't changed jobs and haven't had any job gaps, but we mean 2 full years worth of history of working. So if you have a 3-month job gap, that means you need to go back 27 months of minimum history. That way you have 24 months of working plus the 3-month job gap that will be explained in the file. And then your lender can see that you have met the minimum standards for your work history. If you think you can get away with just leaving off a short-term position and make it look like you were a little bit more stable than what you were, the lender has the ability to pull your W-2 transcripts from the IRS. And this will give them a list of all the W-2s that you have obtained in the last 2 years. As part of the loan submission, you will be asked to provide all of the W-2s in the last 2 years. And if they don't line up with the IRS transcripts, the lender is going to condition for an explanation and those extra W-2s. It's just a lot better if you just address your full work history up front so that your loan officer knows how to package your deal in the best way possible so that the underwriter can approve you with the least amount of condition. Part of your 2-year work history that the lender is going to be looking for is not just stability of dates, but also position. This doesn't come up as much as it used to, but the lender is going to want to see that there is consistency in what you do. Give you an example. If you were, say, a plumber for 20 years, and now all of a sudden you've decided to be an electrician for the last 6 months, the lender might question that in regards to your stability for the income going forward. Most of the time this isn't an issue, but it is something to be aware of whenever you're changing employment from one industry to another. So I like to say that my loan officers almost have to be detectives whenever they're taking a loan application. And that's because borrowers sometimes hold back information that they don't even really know is crucial to the loan application. I had a file just a few years ago that was kind of interesting. And my loan officer, to be honest, did drop the ball a little bit because there was a big indicator in the file that he should have questioned the borrower for, but he didn't. In his mind, the work history had no questions, and he just sent the file over to me. The borrower put down that she had been working at the same company for approximately, let's just say, 5 years. So that means in the last 2 years W-2s, she should have only had 2 because she should have had one for the previous year and then one for the year previous to that. That would have given her 2-year history because she was with the same employer and she didn't have any job changes, so there shouldn't have been any more W-2s than just that. However, there was 3 W-2s for the last 2 years. The loan officer put it in the file, didn't question it, didn't even think to question it, just went on about his business. I don't actually think that the borrower was trying to get past the loan officer on anything. In her mind, this all made sense, and this is why. She had been working for the same parent company for the last 5 years. However, the previous year, she had had a car accident, something totally unrelated to her job. She wasn't on workman's comp, but she did have to take off for a surgery, and there was an insurance claim in regards to her accident. Now, the insurance claim was something that came up later in assets because it was a large deposit that I had to document, so it all kind of tied in there together. But during the time that she was off on the job gap, she was off for approximately, I think it was 4 or 5 months, right in the middle of summer. And so for that time, she wasn't working. Then, whenever she was feeling better, she had apparently been a very good employee and her employer wanted her back. So she went back to the same parent company, but she started with a different division of their company at a different building that gave her a different W-2. The crazy thing is that because she had a job gap, that she wasn't working, but the employer did not really consider her terminated per se, they did not change her dates for her verification of her employment. So whenever the verification was employment done, they said that she'd been there for 5 years. She kept her seniority. She didn't lose any vacation time. All of her paid time off that she accrued was still there for her, even though she was working for a different company underneath the parent company. So the way it all worked out was I had to go back and document all of this for the lender. I had to get letters of explanation from the borrower. I had to get letters of explanation from the parent company. I had to do a VOE from the first company underneath the parent company that she worked for, and a fully completed VOE from the second company showing her start date that she came back to them. And actually for them, it was her first start date because she was new to that parent company's division. And then I had to document her funds to close with the large deposit. So it was a lot of back and forth because I then had to piece together what had actually happened from the application. And the loan officer should have asked these questions. And they just actually thought that it was a nice, stable employment history because from the view of the borrower, she hadn't really changed jobs. Hopefully that gives you an idea of just how that one little thing in there that the borrower didn't know to tell us and the loan officer didn't stop to look at the documents in the file to see if they made sense. Sometimes borrowers are not telling us something because they don't want it to jeopardize the file because of whatever somebody else has told them before they came to us. Other times they just don't know that it's relevant. So if we don't ask those questions, they can't give us those answers. Anyways, if you like this video, please hit like, please subscribe. I'll do another one next week. And thank you so much for your time. Bye.